Now, starting in 2023, South Korea is going to change the way it taxes capital gains on financial investments. Until now, only big single stock holdings worth hundreds of thousands of dollars were taxed, but now all gains worth more than around $16,500 will be taxable. At the same time, though, Korea will reduce its tax on the stock transactions themselves. Yoon Jung-min reports.
From 2023, all shareholders, whether they are major or small investors, will be subject to tax on gains from financial investment. This expands the scope of the tax, which currently only applies to those who own over around $831,000 in a single stock. The new tax will be on net profit with gains up to $16,500 a year exempt. The earnings above that will be taxed at 20% up until $250,000 and at 25% for earnings above $250,000. The new rules also allow tax deductions to be carried forward for losses within 3 years. As well as introducing a tax on gains, the government will gradually lower the tax on stock exchange transactions from 0.25% to 0.15% by 2023. This comes as part of government plans for a revamp of the current financial tax system.
Recently, there has been a rapid change in financial markets as new financial products are being introduced. But the complicated financial tax system makes it harder for people to invest. So we plan to revamp the system.
The government will introduce the new tax system in 2022 to impose levies on gains from stocks, funds, bonds, and derivatives. But the finance minister said he expects the burden on small investors will actually be alleviated due to the lower transaction tax. He added only those in the top 5% of shareholders will be affected. The finance ministry will come up with its final plan by the end of July before putting it forward to the National Assembly. The move brings Korea's financial taxes closer to other countries like the US and Japan. Yoon Jung-min, Arirang News.